Hey guys, I'm Rob Tatro. Today we're talking about how to invest that settlement money that you recently received. I'm Rob Tatro from robtatro.com, head of the Tatro Wealth Advisory Group here at Canaccord Genuity Wealth Management. Guys, if you want to chat about this or anything else specific with respect to an investment, a settlement, your portfolio, go to www.speaktorob.com. We'd be happy to book a no obligation consultation with you to chat about this or anything else. So you receive those investment proceeds. And I know I used to be a litigator in my prior career. I was a lawyer, and I would sometimes set up a client with, an investment or a settlement, and they didn't know what to do. They were sometimes confused. Now, the actual settlement that is received is typically going to come in the form of a cash payment. Now, if it's a larger chunk, you're obviously going to want to focus on optimizing your TFSAs, your RRSPs, perhaps an RESP if you have kids, maybe an RDSP if you have a disabled child. So you're going to want to focus on all of those first. You're going to want to optimize all of that. And after that, you will be left with non-registered dollars. So we're now talking about a larger chunk that needs to likely fulfill an obligation or a goal for you. And is that goal, are you retiring today? If you're retiring today because of the settlement, well, then you need to focus on building a portfolio that's got income, that's going to be tax efficient, it's going to generate income for you, which we can then send you every single month. If this money is going to form part of a longer term plan where you're retiring in the future, well, that's fine. That's got to have a different approach as well. Maybe you're going to have some growth stocks in there, some dividend payers as well, but less concerned about the actual income that's being generated in the portfolio. So you receive the cash. All of it is in cash. $2 million just sitting there in cash in a settlement. Well, do you just go and buy a whole bunch of stocks today? I would strongly advise you not to do that. The first step would be to figure out the asset allocation that you should have. Now, whether or not that's a 60-40 or a 80-20 or whatever it may be, you should own alternatives. You should definitely own a portion of your portfolio in either alternatives, either real estate, private debt, principal protected notes, something like that, income notes, something that is a non-traditional investment. It's not a stock, it's not a bond, with a clear purpose to either create income, reduce volatility, or stabilize the portfolio with uncorrelated asset classes. So that's what the alternatives do. You definitely should own some of those. What I would suggest for you, given that you have this cash now, it'd be to look at investing the alternatives, the debt, and the fixed income right away. In a short timeline, you should kind of put that money to work, because that money, basically the earlier you're in, the earlier you start collecting the dividend. You want to be in, you want to collect your money, you want to start earning income on that money. The stocks, those, you want to be a little bit more prudent. You want to make sure that you're not doing market timing. You want to reduce your market timing risk. So how do you do that? Well, we like to use what's called a legging in strategy, where you will leg in chunks of cash over time into the stock market. So perhaps initially you'll buy maybe a third or a quarter of your equities right off the bat. So you would buy that kind of in the first week or two that you receive your cash. You would try to find a down day. You'd kind of buy sectors that are either oversold if you could, but you definitely want to have some of that money working, because what you don't want is to have your settlement sit in a bank account or in an investment account and just sit there for 2, 3, 4 years while you wait for a correction. You want to have some of your money that's participating in the market. And then depending on the amount and depending on your asset allocation, we would suggest a timeline to have all the money legged in. Maybe it'll be 3 months, maybe it'll be a year, maybe it'll be 2 years, but a period of time where the money gets legged in. So the way we do for that, we pre-establish rules. The rules are preset. They say, okay, if this happens, a 5% correction, a 10% correction, we start buying more equities. 20% correction, we buy more. 30% correction, we buy all of it. That way, you're buying. If you end up buying in a market correction, you end up buying all the way down, and your average cost based on your securities is going to be significantly lower and in a much better position to then participate in the rally that always follows corrections. So a legging in strategy. Now, what if the stocks don't correct? What if the stocks just continue to rally? Well, the good news for that is over a period of time, pre-established rules at 3 months, at 6 months, at 9 months, where we are buying equities regardless what is happening in the market, we are buying. So if there's no correction, we buy. The reason we do that, one, we want to remove emotion. pre-established rules. They remove emotion. We don't want to be emotional when it comes to money. And it's very difficult for people to not be emotional with their own money. So we pre-establish rules, make sure that the money is put in over time. Also, it reduces your market timing risk. So we want to own equities because equities have performed so well in the last 100, 150 years. It's a really, really good asset class. There's some really good companies that exist out there. You get to participate in the profit. If a company is able to generate 10 to 15%, return on their investment for their shareholders, that's something we want to get. You want to get the best ones. You want to own the fixed income and the alternatives right away. And then we just build a strategy around the legging in portion. Guys, if this is something you want to chat about, please go to www.speaktorob.com. I'd love to book a no obligation consultation with you. Happy to explain our process in more detail with you over the phone. I'm Rob Tatro from robtatro.com, head of the Tatro Wealth Advisory Group here at Canaccord Genuity Wealth Management. Please, guys, go to our YouTube channel, give us a like, give us a follow. Let us know what your comments are. We'd love to hear from you. So thanks for tuning in, guys. Have a great day.